All right, so welcome to another Saturday live reflections, weekly reflections. So today we will go through all the trades that we've taken for the week and go through some entries, trading the trend, trading a bearish trend, trading the bullish trend. So let's see how we can get that today. So right now, so let's just go through this, right? So starting of the week, 16th of November, 16th of November, I took some buys at 138, 182. So this was during the London session. Very small lot, right? Because starting of the week, it's a Monday and it's a London session. Very small lot. Took a buy at 138, 182. So let's go to that. Let's go to that. Starting of the week. 16th of November, 138, 182 was right over here. Right over here. So on the 15-minute, what happened was this looked like it was forming bullish, right? It looked like it was forming bullish. So then what I did, I drew this all the way here. So this hasn't happened. So this was there, this was support. And if I extended this all the way to the left, I see that this was a support, right? This was support, and I was hoping that this would respect that, right? So as soon as the next candle broke the high, that was around 138. Yeah, 138, 182, right over here as it was coming up. I took some buys over here with a 0.25 lot, and then as it was coming down, so this candle went up and closed right below, and as it was coming down below my entry, I closed it at -$7 loss, right? -$7 loss. And then what did I think? Okay, you know what, like this candle, so these are the entries I look for, right? This candle formed a weak bullish candle, and now this candle broke the high, but it's coming back down. So it's coming back down, and we had some bearish sentiment for the pound. So what did we do? We took sells. I took sells at 138, 124, 138, 124, because as this candle was coming down, it came down all the way here, and it was going to break the low over here, right? So it was going to break the low. So I took sells from here, 138, 124 to 138, 073. So 073 was right over here. So I took sells from here, 138, 124, right over here. Yeah, as it was breaking the low, because it was obvious that price is going to break the low, because we had clean candles to the left. Why? Because if you extend this right all the way here, you see that this was a support, this was a support, this was a support. So what was price trying to do? Price was going to come back to the next support, right? So 138, 138.73. So over here I secured. I went to this, so 138.073. So 138.073 was right over here, because it was the starting of the month, and not starting on the month, it was starting of the week. So I just wanted to be safe. So my stop loss was right over here. So I just secured here. As I entered, price just kept falling down. So that was the bonus move. So 138, 124, entered at, and got out at 073. So 073, so $243 right over there. So got out at that point. And then this was later around, I think, exactly 1 hour later, 10:27. That is 1 hour later from here. So 138.041. So 138.041 was right over here. 138.041 was as this was breaking the low over here. Yeah, as this was breaking the low, it was coming down. So what did I do? I knew that price was trying to break up, but it couldn't form here, right? Broke the low. So now we got further bearish news, and I wanted price to go down, right? I wanted price to break this low. So this was the support that was formed, and we had clean candles all the way here, clean candles all the way here. So I was waiting for price. So 138.041, took entries there right over here. Took entries at 1 hour later, so exactly 1 hour later. So took entries right at this point. So 1 hour later, it's two candles right over here. 138.024. So 024, hold on. 024 was right over here. Yeah, so 041. 041 was right over here as we were coming down here. Why? Because right now we, like, I knew that price was trying to come up but couldn't form up, right? So it came all the way back down, and then we got this clean candles, and I secured this at 903. So 903 was 138, 903, 138, 903 was right over here, right over here. Yeah, perfect. Right over here. I secured at this point because, like, why, we are approaching support and price came down, whipped all the way back up, and then it further went down, but that's okay. That's on the 16th. So 16th, this was the trade I took, and then this was during New York session. This trade was taken on. Now see, right? I took a 5 lot, a 0.50. So now I was good for the day. I was good for the day, and I wanted. So I reduced my risk entirely, reduced it to 0.35, 0.35. So this was taken during vaccine optimism. Vaccine optimism came right over here. So 138, 138. So 138,391, right? So 138,391 was right over here. Right over here. Yeah, I remember this. 138,391. I took it here. I took a very small lot because this comes with experience, right? Because vaccine optimism pushes price up. So my stops, I had a mental stop. So whatever said and done, like, my risk was only $35. So if price came down, whipped down all the way, then I would close it in a loss, which is 35 or less. So took trade here. So let's see that, right? So 138,391. So now long position 138,391 was right over here. So my stops are open. Because I was leveraging the profits I made earlier for me to take a trade up, right? Take a trade, or, like, you know, to take advantage of the situation. And what happened? Price went up to 138,567. 567 was all the way here. So I secured right over here. Yeah, right over here, because looking left, I saw resistance, right? Resistance here as well. So right over here. So what happened? Price went all the way up. Price went another, from this point, price went another 30 pips, but that's okay. I did not, I was happy with this, right? I was happy with 0.35, and yeah, so, and then this was my runner. Yes. So I took 0.50. So this was a runner, the same entry, right? 391. So 0.50, secured $58 on this. So this was my entire risk, right? I was risking $35 to $50, secured $58 here. And then, and this came down, and this was supposed to run for another 100 pips, because vaccine optimism not last week, 2 weeks ago on a Monday, vaccine optimism had further place, and we had 200 pips to the upside, right? So now price kept on dropping, came back to my entry, and I got stopped out. So it is what it is over there. And then we had on the 16th, we had gold sells. So gold sells, right? So gold sells. Let's go to gold sells. Okay, so gold sells was at 1869. So let's go to gold. Reset chart. Let's go to the 16th. 16th. Yeah, this was 16th. Let's remove everything over here, remove drawings. And 16th was right over here. 16th was right over here. So let's put that up. So 16th, this was taken during New York. So let's look at the price. So price was 138.69. So this also was taken for vaccine optimism. Same time. Look at this. This was taken at 1:55. So my time, it's around 5:50, 5:30. So this was taken 1 minute later, exactly 1 minute later. So 51, like, so 0.20. So 869 was this move, right? 16 November, 869, as price was coming up, right? Price was coming down all the way here. So I took this trade right over here, 869, yeah. 869, I took it, and this was monitored on the 5-minute. So let's put this up first. 869, the short-term position. 869 was right over here. Yeah, 869, and I took one position, right? 0.20. Yeah, 869. Yeah, I took 0.50. Yes, 0.50. So 869 here, 869 here. So this one I secured 0.30 at 867.93. 867.93. So let's look at that. So it might look like a very small 867.93. So I entered at 869 and I got out at 867. So this is around 20 pips, right? So entered at 869 over here. 867 was right over here. Yeah, this was monitored on the 5 minute. Once again, the stop loss was $50. I was aiming only for $50. If I went into a $50 drawdown, I would have gotten out of it. So look at this, right? Even though it looks pretty small, this entire range was filled with volume. So this was around 17 pips, this small area, right? So I got 17 pips there. I closed out majority of my positions at $50 profit. And then I had a 0.20 running, right? A 0.20 running. It ran until 867. 867 was right over here, further down. So I secured at that point. And I wanted, so looking left, right? Why did I secure over here? Like I saw that we had support here all the way on the 30-minute, right? Look at this support, respected. And if you were to extend this further, you would see more and more supports. Support. So right over here, resistance now turns support. Previous support now turn resistance. Previous resistance now turns support. Same thing, support. So I secured at this point. At this point, I was comfortable with the profits. I secured. So yeah, so that was another trade. And then the vaccine optimism was fading. Right? So now we go to GJ. So this was the vaccine optimism, right? Vaccine optimism was fading, and this was the favorite trade. This would be the trade I would bet all my money on. I would bet all my money on this. This because I was very confident with this trade. These are the trades and these are the setups I look for. Right, so price came down. I didn't take a sell here, no, because just because 1 15-minute candle is bearish doesn't mean the entire trend changes, right? Didn't take a sell as this low also broke, because why? Because there was a resistance here. So previous resistance now turns support, correct? So what did I do? I waited for a weak bullish candle to form. So what happened? Price came up here, and then like if it broke the high over here, then selling bias would be reduced by 50%. The probability of a sell would be reduced by 50%. So what did I do? I waited till the low broke. So as the low broke, right? As the low broke, now this setup, see how I have used this was a two lot. Yes, this was a two lot because I was comfortable with this setup. I knew that if I take this setup 10 out of 10 times, 8 times it would be profitable. So I took this. So if you see this all these trades were conservative, 0.15, 0.20, like 0.35, but this was a two lot. Why? Because these trades work out for me. So 138.302 was right over here. As it was breaking the low over here, entered right over here. And my stops were kept above this candle, right above this candle. So stops were around, this would be around, 7-8 pips. So 9 pips, very reasonable, very cost effective. And where did I secure? So 0.50 I secured at 209. So 209 was right over here. So why did I secure over here? Because we filled at least 80% of this wick. So wick, this wick was filled. So price, there was an opportunity for price to like reject and come down, or all the way. So over here, clean move, right? So why would I not secure and let price go back into a drawdown, right? So I secured majority of my positions. 0.50 secured here, and this one 0.302 or 0.25, this I secured at 168. So 168, as price came down here, 168, right? So I secured that here. So this was what? This was this was almost 15 pips profit. And then this I kept it at break even. So you should always keep a runner to do your dirty work. So 0.25, now I was comfortable. I was like, you know what, I'm just going to leave this 0.25. So this 0.25 came up all the way here, hit my stops at break even, and then look what happened. Price just gushed all the way down. Price just went all the way down, back over here like 50 pips. So yeah, so it is what it is. And so that was okay, that was fine. And what happened next? what happened next was we went to yeah, so this is the next day, right? Next day, 17th. This was taken once again in the London session. I risked around 3 lots. Yeah, 3 lots, because I was waiting for this, right? I remember this. So let's go to the 16th, 17th, 17th. Let's go to the London session right over here. 17th London session was right over this area. So 17th, this was London session. Yeah, this was London session. Let's enlarge this. Okay, so now this was support, right? This was a support that was formed. This was a support that was formed, and this was a resistance. Yeah, this was a resistance right over here. All right, so now this was the support, and now this is a resistance. So now we'll look at the entry price. 1892 at 11. So this was around 1 p.m. So that was around London time for me. 1892.10. 1892.10 on 17th was right over here. 1892.10. Yeah, 1892.10. Yeah, it was right over here. Yeah, this area, 1892.10, as it broke the high. Took buys 1890. Yeah, see, I closed it. I closed 0.10. I closed it, and then I closed the 2 lot at 1892.34. Then I closed all this. I closed it. All this I managed risk. See how I managed risk, right? Perfect. So managed risk all the way here. Price came up and came back down. So I wasn't comfortable because it was London time, and I was hoping for this area. This area was a beautiful area to get filled. So I was hoping for this area to come up, but didn't work out. So on that day, we had, I think, we had core retail sales over here. So starting from Tuesday, it became very tough, very, very tough, right? Very tough. And then as we went down, I took a loss here, and then we came back. So I had a buy stop. See how I had a buy stop at 2 lot 1893. So why did I have a buy stop? Because I wanted price to come out of this wick and fill this, but that never happened, right? I closed it. I wasn't comfortable. I was going for lunch, so I closed it. No hesitation, nothing. Closed it. Once again, yeah, the same thing here, like 480 buy stop here, closed it, and then I had a sell stop at 1887. Why did I have a sell stop? Because price was coming down, right? 1887 was right over here, right? Let's put this here. 1887 was right over at this point, but I closed it. Like, I didn't even keep it on. I put a sell stop. So I was thinking, you know what? I'm putting buy stops and I'm putting sell stops. So I had to stick with one bias. So I closed both of my buy stop, sell stop. Order never got activated. And then we came to GPJPY. So this was during the New York session. So 138. So let's come back to, this was on the 17th. Let's go to the 17th, right? Let's go to the 17th. Let's remove this. 17th on the New York session, right over here. Yeah, so this was once again a range. This range was a pretty tight range over here, right over here. Tight range, 17th, right over here. All right, so this was a very pretty range, and 17th at this time, right? So now we see that what's the entry over here? 138 288. So I had two lots here, right? Two lots open here. So 138, once again, 138 288. So 138 288 was right. Okay. So let's place this here. Now this was the area, right? Yeah, this was the area. Let's remove this. So what was I aiming for here? I was aiming for this candle to come all the way here, this area here. Yeah, this area here. And what happened? 138 288. As it broke the high over here, we got in, and then we failed. Price went up, but came back and closed back below. So what did we do? We managed risk. See, I closed it. I closed this one lot in a 5 pips drawdown. 288 was my entry. 233. Price came down to 233. As it was coming down here, I closed it. I closed my positions. I wasn't comfortable with it. Then second attempt was at 138.303, same place, right? 138,303 was right over here. 138,303 was as this candle broke up. Yeah, wait, yeah, this area, right? This candle formed like this. This candle broke the high over here. So okay, 138,303. Let's look at the 30 minute. Let's look at 30 minute. 138,303. Let's see. 138,303. Yeah, this looks clearer. Yep, this was taken on the 30 minute, right? So 138,303 was right over here. Yep. As this candle broke the high over this, we entered over here, 138,303. Price went into profits, came back down, all the way down. So at this point, I closed all my positions. So this was closer 7 pip loss. See how everything is managed. I don't let it hit my full stops. I don't let it hit my 10 pip stops. I close it ASAP. If I'm not comfortable, no worries, close it ASAP. And then what happened, right? At 17th, 138,038. So now that price couldn't break up above, right? So same thing here, same entry right over here, this area. This area was the same entry 138, 138. What was my entry again? 138 038. 138 038. Yeah, sell positions. Let's go to short positions. 138 038 was right over here. Yeah, it was right over here. Right over here, stops are above this. So on the 15 minute, let's go to the 15 minute. 15 minute look like this. Yeah, so on the 15 minute, stops were kept above this. So why did I keep stops over this? Because now I see that price closed here. I wanted price to head all the way back down because this was a clean candle, right? Clean candle, price went down. I took profits at 137,989. 989 was right over here. Yeah, right over here. So this was more money left on the table. So this was a forced trade. I would say this was a forced trade because we tried 2 buys, didn't work out, and then price went down, and I recovered my loss. I was in a minus $203 loss, so recovered that. And then this was just after the stream. Core retail I think core retail sales, right? Core retail sales were pretty bad. So as we were leaving the stream, I told you guys that if core retail sales are bad, gold is going to continue during New York exchange session, right? New York exchange session, gold is going to continue up. So 1891, I took entries on gold on the 17th. This was on the 17th of November. So 17th of November is right over here. Yeah, so it was right over here. This candle, yeah, I remember this. 17th of November, I had buy stops placed, took entries at 1893, if I'm not wrong. Oh yeah, 1891. 1891, 94. So 1892 basically. Let's go to 1892. So I took positions as, because this, look at the time, right? This time was 7 p.m., right? 7 p.m. So at this time, you can expect New York exchange volume to kick in. So price came all the way here, right? 1892 was right over here. So as it was coming up, I took buys, and my stops were kept. My stops were kept below the 15 minute, above the 15-minute high, just above this. Let me show you that. Let me show you that over here. So yeah, this was the breakout. So my stops were kept just below this because I didn't want price to come all the way back down. So why? Because this area was a very strong resistance, right? So my stops were around 8 pips. 8 pips for this, and price went up. So I thought, you know what? Okay, I had a good day. Like I got GBP sales. So now can I close this in a profit? So I closed it not even 10 pips, around 7-8 pips. I closed it on $200 profit. And then this candle got me the 10 pips. This candle went up 1892.95. So exactly 10 pips. So this went up 1892.95. This went up all the way here. 1892, sorry, 1892.95. So 1892.95. So right over here. 1892.95. Got my 10 pips here, secured the trade. And then what happened? And then when price came up here, now I was thinking, you know what? Like we might be able to get this wick fill, right? We might be able to get this clean candle to the left. So I entered a 0.50. Where's that? Yeah, right here. 0.50 right over here. Right over here. I entered it. As soon as I entered it, I closed it. I closed this position and called it a day. I call this a day, like, you know. So this was pretty good. This was pretty good risk management, and I called it a day. And then what happened? We went to on the 18th JPY buys. This was during London again. This was during London. So I took a two lot open right over here. Wait, let me show you that. On the 18th, so let's come to the 18th. Yeah, so this candle over here, I think oh no, this was not the 18th. Wait, the 18th, this candle, yeah. So this candle 18, what was the entry? Entry was at 138.141. So 138, this candle, yeah. 138.141. Now this range was still continuing, right? This range from 17th, it was still continuing. So this was taken, yeah, this was taken with a friend. So we were discussing about how price can break up over here and go up. So we took entries right over here, and price came up, went into profits, and then boom, came back down. So at this time, once it was coming back down, I closed my positions. I closed the one lot here, and I closed this. So this was a minor loss. And then we come to New York. So we come to New York. So this was taken 137.859. 137.859. 859. The New York was at this time, right? So 137.859. 137.859. Where is that? So this can, okay, it should be this candle. 859 was taken 137.8. Okay. So this area, right? So this was at 5 p.m. Okay. So this was at 5 p.m. Yeah, so I think this was an impulse entry. This was an impulse entry, and I closed it. I closed it in a loss, right? 0.50. Yeah, I closed it in a loss. So let's go to the next this thing. So this was right over here. Where is that? Let's look at that. Okay, right over here. So 137.859 took sells, didn't work out. Oh, okay. This was this in the night? Was this in the night? I think this was in the night. No. This was during this. Yeah, this was in the night. Yes, this was the night. Yeah, I took some cells because see, this was, let's close this. So let's put this right over here. So let's go back here. The 137.859. Now what happened was price was stuck in this range, right? Let's draw this. Let's draw this all the way, right? Let's draw this all the way. So this was a clean candle. So price was stuck in between these things, right? So my thought was like on the 18th of November, so price was here. So as price came down 859, I took some entries right over here. Yeah. And price came back up above, and I closed it. And that's why these losses were here. So losses were $60 loss. $60 loss on one lot. So that was okay. And then this was just hectic. So this was later in the night. Once again, this was later in the night. And see, if I had held this, I would have woken up to a $3,000 profit. So 1875, so 1878. So let me show you exactly where I took. This is on the 18th. 18th. So let's go to the 18th. 1878. 18th, right? So 18th is right over here. It is the night. So 1878. So let's put this down like this. Okay, and let's bring this in. This area was the new resistance. This area is the new support, all the way back here. Okay, so my entry was at 1878. 1878.77. 1878.77 was right over here. Yeah. As it broke the low, 1878.77 was right. Yeah. As it broke the low, I took some sells, right? Because look at this kind of clean candle to the left. So I was waiting for price to mirror this exact thing. Why? Because now this area over here was some kind of a support. If you extend this to the left, you see that this area was some kind of a support, and resistance here. So this area came all the way back down. So what did I do? So as it was coming down, right? As it was coming down, I took some cells. I took some cells right over here and right over here, right? 1 7. This was around 11:30 in the night. So 11:30, it was past my trading time. Took cells and I was reevaluating. Why am I taking a cell? Just because today was a very slow day. Why am I taking cells? So I closed this. So my commission was $14. I closed this in a $10 loss. So $10 loss. I go have a shower and I come back and I see price has just fallen. Price has just fallen. 1878 was my entry. I closed it in a $10 profit, but eventually it was a minus $4 loss. And then price fell around 38 pips. Price fell around 38 pips. So then I entered again. I entered at 1875. 1875 right over here. 1875 is right over here. So now I was thinking, you know what? Price is going down. Like, maybe we can get price to this area, and but then, like, as soon as I entered, I'm thinking to myself, I'm good during New York session. Asian session, not so much. London session is okay, but New York session, like, I've seen moves during New York session. So why am I trying to just force a trade here and get some cash out of it, get some pips? Is it for my own personal benefit, or is it because I'm a rule breaker or a rule maker? I am a promise keeper or a promise maker. So remember those promises. Remember those simple principles. So I closed it. As soon as I entered it, I closed it. So this was closed. Let me show you. Yeah, this was closed right over here, $4. So once again, another $10 loss here because commission was $14, right? So $7 commission, $14. So yeah, 1874.98. I closed it there, and then I look back again. And then price just fell. This is my entry. 1875 was my entry. 1875 was right over here. Stops were kept middle of this on the 15-minute, and then price just kept on falling. Price came all the way back down to this area, 40 pips. So that's fine. Money was left on the table, but it's okay. I was following my rules and I was okay with it. I was fine with it because, like, there's always another day, clear skies, like, sunny days and clear skies. So no problem. I'll come back the next day. And that's what happened. So I came back the next day. So this was on the 18th. So this madness was over. This madness was done and came back all the way next day. So this was on the 19th. On the 19th, yes, 764. I had some buys here, right? Sells here. Sorry, sells 764. And so let's analyze that. So let's go to the 19th now. Let's go to the 19th. So let's go to the 19th all the way. Let's minimize this. 19th. Yeah, right over here. Right over here. Okay, so once again, this range from the 617 was still continuing. It was still continuing. So now at this point, I'm thinking, what? This was the 19th. So now price was trying to break up. But couldn't break up. This resistance was previous support, now turned resistance, right? So every single time that happens. So now I drew this support over here. So this was once again some vaccine optimism. I think it was something to do with Moderna or some shelf life. Yeah. So price came up here, right? Formed like this. It formed like this, and yeah, it formed like this. Okay. So what did I do here, right? So 18, right over here. So GPJPY. So took this is 19, yeah. So took some cells at 137,674, right? So this cell was taken first right over here, 674, 137, 674 was 137. Wait, what was this cell? 137, 764. That's what. 137, 764 was taken right over here. Because on the 15-minute, right? Let's look at the 15-minute. 15-minute look like this. So why is that? This was on the 19th. So let's go back here. Yeah. So the 15-minute broke the low over here, right? So yeah, 15-minute was coming down. So I took some entries right at this point. 764, like, over here. Yeah, this candle. This candle was coming down. So I took some entries right at this point, thinking, okay, you know what? We might be able to get this wick fill. So what happened? Price, yeah, 764 closed very early. 743. If the candle does not break the high or low of the previous candle, what do we expect to happen? Do we wait for the next candle? Yeah, so we always wait for the next candle. If a candle does not break the high or low, you have to always wait for the next candle. Or if the candle forms like a bullish, right over here, let me show you an example. So over here, right, so this was a support, right? So this candle broke the high and went up. So you could have taken the trade here as well, but why didn't I take the trade here? Because there was a heavy resistance at this point. So but in case, right, how you could have managed this trade is, in case this candle came and broke the high over here, then selling bias decreases, buying bias increases when it breaks the high over here. So what happened here? We waited. I closed this in a minor, um minor loss, minor profit. Yeah, minor profit. Closed it as soon as it was coming down, closed it. And then this was on gold, right? So now we are still hunting for GJ, but this was on gold. This, I told you, I have a buy stop. I was placing a buy stop at 18. I didn't tell you, but I placed the buy stop at 1864. As I placed the buy stop on 1864, this was on, once again, let's go back here. 1864 was on the 19th of November. 19th of November, 1864. 19. So this was this thing. So 1864 was here. Let's remove this. 1864, right? So on the 19th, okay, right over here. Yeah, I remember this. All right, so let's place our supports and resistance. So support is right over here. All right, placed here. Then there was another mini area right over this point, right? So why it looks confusing right now is because all this didn't happen, right? All these areas didn't happen. So what happened here? Price, right? Price, this at this area, price came up, and I had a buy stop at 1864. Where is that? Yeah, buy stop 1864, exactly at 1864. See, exactly at 1864 my price got activated. 1864.25. So 1864 was right over here. Price went into, yeah, I would say price actually went into some good profits. Price went into this candle, right? So around 13 pips. But see, I placed a buy stop and I wasn't looking at it, right? I was looking at it because we were hunting GJ. So GJ was looking fancy. It was just like this. This was going up, coming down. So we were looking GJ, and as soon as I was going to execute on GJ, I saw my buy stops have got activated. So price had gone into 13, 14 pips profit, and it was coming back down. So now I had a better trade in play. Okay, I had a better trade in play. So what did I do? I closed it and I took entries. First I took entries here and then I closed this at 125. Look at the time, 2:08, right? So this was entered first at 2:05 and then I closed this around 2:08. So yeah, this got activated at 2:08 and then right over here. So 137.825 was over here as it broke the low. Yeah, this was the perfect trade. I wait for these trades. I personally wait. I love this kind of entries. These entries throughout this week, these entries have worked out for me perfectly. I had to manage risk on a certain level, but it worked out. So how much did I execute here? I executed 3, 4. Yeah, I executed a 5 lot. Yes, I executed a 5 lot over here, and 137.825, 137.825. I secured. Yeah. So look what happened, right? So this was risk management. 825, same time, same position, activated at 251. So 825 was activated right over here. So now what happened was, as we entered this, right? Stops were above this area. Stops were above, I would say 8-9 pips. Was it 8-9 pips? Yeah, 8-9 pips. 7 pips, 7.8 pips. So as we entered this area, price was coming down, going up, coming down, going up. So I told everybody that, you know what, if we come up over here, I'm closing 50%. Now price came into profits, right? Price came up all the way here, like 7 pips. So as I was going to secure that, boom, we went all the way back into entry. So when we went all the way back into entry, now I was thinking, you know what, price gave us 6-7 pips and now we didn't secure 7 pips. Like I would have secured at least like 60%, didn't secure nothing. price came up to back to my entry. So when it came back to my entry, I closed one lot. I closed one lot because I wasn't willing to risk. I closed one lot. This was for risk management purposes. And if this remaining full lot came back into my entry, I would have closed 50% here, another 50% here, and I wouldn't have let anything hit my stops. So as price came up, I closed it. See, I closed this and I was in a minus $6 loss. And then 825, this kept on falling. So 3 lots. So I secured majority of my positions at 3 lot. 732, this was around what, almost 8-9 pips. Secured that. So I was happy for the day. So now I had a point. I think I had one lot running. Yeah, I had a one lot running. So one lot running, and I secured that one lot. I secured that one lot right over here. So this ran for almost 15-16 pips. So 825, 677. So 677. So this went all the way back here, like, you know, 677. Let me show you. Right over here. 677 was here. 677 was right over here. So I secured at this point. At this point I secured, and then we had 667, yeah, 677. So yeah, and this one, right? So this one was 0.97. So 137,667. Let's look at this, right? 0.97. Okay. So this one was a second entry. Yeah. So this one was a second entry. Second entries were taken at 664, 664, 664, C664 right over here at this point, right? 664, 137, 664. So this area was taken as this low was once again broken. 664, yeah, right over here. But what happened? Candle came down, and then it went all the way back up. So as it was going back up, I closed it. I closed it at 692. So 0.50, $13 loss is perfect. So this is on 2 lot, $53 loss is perfect. And then I closed that right over there. So and then this was a misclick. This was a misclick. I was gonna take sales on, see the time, right? It was gonna take sales at this point. I clicked this and I was like, oh shit, this is a GBUSD. Like, you know, I closed as soon as I opened it. I closed it. I closed GBUSD. So this was once again 2 lots. So $16 loss. Yes, this was for no reason, right? So no reason. That's okay. Things happen, but see, once you misclick, right? This is what back in the day, if I misclick, I wait for price to go into profits. That is a human thing. That's a human thing to do. You wait for price to go into profits, and then price just goes into a drawdown. So you don't know what you're going to do. You wouldn't know what you're going to do because, like, you would want price to go. You have never analyzed that GP. Like, this day I never analyzed GBUSD, right? So GBUSD like was going, I was like, you know what, I'm just gonna close it. I closed it, and then I took sells like 643. So this was right over here. Yeah, this was perfect. This candle came up, this candle did its thing, and it was coming down. So now my thought, now this is gone. This position is done, right? Now my thought process is like, this area is a resistance, right? This area is a resistance. So as price was coming down, this closed like this. So this closed here. I didn't take sales here, didn't take sales there. I took sales at 137,643. 137,643 was right at this area. Yeah, right at this area. Once this candle closed, I took sales here. I took sales here because this was a resistance form. Resistance. So this area, what if price is trying to retest this area, right? So textbook trade. Price broke down, retest this area, and closed pretty bearish, right? Pretty bearish. A nice bearish candle all the way down. So I took sales here. So we had this wick fill to go, and then what happened? Price just went on. Like all the way down. So at this point, I secured my trade pretty early. I secured my trade at 571. So 571 was just over here, right over here. Yeah, right over here. So then I see this one, right? Once again, same thing happening. Same thing happening on GJ. GJ formed a support here. Why? Because this was a support to the left. Support to the left. So you look left and you see if this support can be continued, right? So this support, previous resistance is now support, right? So what happened? Now we had this clean candle to fill, right? We had this clean area to fill, this area to fill. So now you wait. Just because this broke here, it doesn't mean you have to take a sell, right? Why? Because this closed right above this.
this closed right above this, and this formed a support. So let's say you had taken a sell here, price came down in profits and closed here. So you have to manage your risk. You have to take your risk off at this point, right? And now when price was breaking below this, I was watching, looking at the markets, but you know what? I was done for the day, and like, proper profits. This was my last trading day. So I secured around, on a two lot, I secured at $150, almost $150. Yeah. So $140. Yeah. So I secured that and I was done for the day. And I was like, you know what? GJ is ranging and GJ is going down, but I'm done with GJ today. Until GJ breaks down, I'm done with GJ. And GJ did break down, and I had some members taking sells at this point, and they got around 20 pips over here. So they got around 20 pips, and yeah, so that was it for the day. That was it for the week. It was a pretty tough week. It was a pretty tough week, starting Tuesday to Thursday, starting Tuesday to Wednesday, pretty tough. Thursday, we got that perfect trade on GPJPY right over here. And yeah, so that was a pretty tough week. Like DJ was just ranging. So next week, I would say that we might have a pretty decent moves, and Brexit might be in play, and next week we have some fundamentals as well, so that might full GJ up. And yep, so that is for the week. So this week I've made a profit of $1,285. The $1,285, look at my losses, right? Losses are kept super small, super small. On a two lot, closing a $53 loss is awesome. I would say that's pretty good. And see, right over here, closes at minus $2. And if you look at this, starting off the week, starting off on a Monday, didn't go all in, tested the market 0.25, right? 0.25, closed it. That's it. It was a loss. And then, I wasn't faced by it. And right over here, look at this, was a losing week. This was a losing day. So losing day, but in the end, CPI, core retail sales, right? Yeah, core retail sales, get that gold buy, and then gold GPJPY sells as well. So this area, see how risk was managed, right? On a one lot, close $50. On a 0.5, $30. Didn't let it hit my full stops at all. So right over, this was the second attempt on GBJPY, went up, closed on $12, and this one went up and came down. So this one was like the $50. This thing came down, and I closed it on $37 loss. So right, so that this strategy, right? Strategy in the sense, strategy is all about risk management. You have to manage your risk. End of the day, risk is all you can control. I've been saying this for some time now. Risk is everything. With or without risk, with high risk, obviously you can make some money, but it can also destroy your account. High leverage, destroying account. So this week was pretty good week. Like good week in the sense, Monday I managed my risk, right? On some days, I think it was a Wednesday. Yeah, Wednesday didn't take a trade. Only in the night I tried some sells over here, but these sells, like, it would have given me extra 3K, 2K, like almost 5K here, but that's okay. Like, I broke my rules, but I realized that I broke my rules, and I closed it. I wasn't adamant on holding this. I closed it. So what happened, like, came down, right? End of the week, I look back. And I'm proud of myself. Like, I sat on my hands. I took perfect trades. I took high probability trades, and that resulted in a $1,285 profit. $1,285 for Monday. So Monday, Tuesday, Wednesday. I don't think Wednesday we didn't take a trade. I think Wednesday was a very free range day. Thursday. So three trading days. Took couple of trades, and that's it. 1,285 days, and you work only 2 hours a day. 2 hours a day, and accumulating $1,295 for the week is awesome. I would say that's pretty good deal. That's a pretty good deal. And see, my lot sizes are pretty relative, right? So I started the week with 0.25, and as we were going down, increase my lot size, leverage the day's profits, leverage the 2 days profit. Then in my mind, I know that, okay, you know what, I'm up for the week. I'm up $600 the week, so I'm going to leverage $200 of that, $100 of that. So whenever you come to the markets, you will feel that intuition, that that you can make money today, you can make some trades, you can make some tips today, and you can make the trade. Like, you can take that trade. So this was taken on the live streams, in the live streams, and this was taken perfectly. So everything is recorded, right? Everything is recorded. There is no gimmicks. All my losses, you can go to my Instagram, you can check my Instagram, losses, profits, no trading days, everything is recorded. You can go to YouTube and also check. So basically I am a living proof that trading, that forex works. Forex works. So this is transparency. I've shown you all my losses, all my wins, all my lot sizes, and all my mistakes as well, like mistakes right over here. In the end, we are all human. End of the day, we are all human. So taking losses is part of the game. You can take losses, but you have to be in this game for the long run. You can take losses. You can take maybe like 1,000, 2,000, 3,000. You can take a loss, no problem. But if that means like your capital is being eaten away and like you are out of the game, then that's it. That's it. You have to go somewhere else, ask for capital or earn for capital or whatever it is. That's a big risk, right? So you have to use relative lot size and you have to be in the game. See, this trade went my way. End of the day, it went my way. But look how I manage my risk, right? This trade went my way, but I managed my risk right over here, right over here. See, this was taken at 252. That's around 6:30 at 6:30 my time, at 6:30, 6:45. And then I closed it. I closed these trades and I reattempted those. I wasn't holding them. I reattempted them. Look at the time, 3:22. Reattempt 6:43. As I got more confirmation, reattempted them, and I closed this in a profit. So look at this, right? This two lot was close in a $53 loss, but look at this one lot recovered this loss, and the other lot gave me the profits for the day. So end of the day, risk management is key. Risk management is important. Risk management is key. And yep, so that's it for the weekly reflection. So now we go to see these trades we took for the week, right? So the trades, the trend, the trades like this, breaking of the low, breaking of the high. So let's look at certain things over here, right? So let's look at this trade. So this trade was taken, yeah, this trade was one of the trades we took. So this trade was taken right over here. So why did we take sales, right? So this FX 101 asked me this question. Let's go to his question one more time. If a candle does not break the high or low of the previous candle, right? What do we expect? What do we expect to happen? Do we wait for the next candle? So what do we do? So let's see now, right? So this was vaccine optimism. So this candle, this on GJ, this was coming up vaccine optimism. So if you were in this GJ market for long enough, right? If you're in this GJ market for long enough, you would know that vaccine optimism always fades. Any optimism that comes in always fades. And GJ looks at a bigger picture. The bigger picture is that GJ is bearish. No matter what anyone says, GJ is bearish because Brexit deal is still paused, lockdown going on, and then we have the European Union, some issues in the European Union about trade deals and stuff like that. So we know that the bigger picture is bearish. So basically, this was the example I gave, right? The example was that you're in a ship, right? You're in a ship and then the ship is sinking. One side of the ship is sinking. Just because you're in the other side and there is no water coming into the ship doesn't mean you're safe, right? Doesn't mean you're safe. Same thing. GJ is a sinking ship. Just because like people like pump money into GJ doesn't mean that overall trend is going to be bullish, right? Overall trend was bearish. I've been saying this from the start of the week. GJ is bearish. GJ is bearish. The weekly is bearish. So what happened? So this trade is called trading the trend. Trading the trend, right? So the trend was bearish. The overall trend was bearish. So you scale down to the 15-minute or the 30-minute and you look for trades like this. This has worked out plenty of times for me. So this formed like a bearish candle, weak bullish candle. And as this broke the low, your stops were right above this. So cost of trading reduces once again. Your stops are not like above this or above anything else, above this, because as it breaks the high over here, then you would know that the trade is invalid. So right over here. So we came all the way back down, fill this wick, right? So when price breaks, this is a momentum time, volume time. So if you're trading these setups, you can trade it during a volume time. When there's volume, you can trade these setups and price will just gush down. And then we had this full stop here. The first stop was right over here. As we broke the first area, we had headed down perfectly. So this was one trade, trading the bearish trend. And let's look at this, right? So this was early in the day, right? So this was early in the day. I think this was last week or so. Now you see, right, this area 1 2 3 4 5. So just because this candle formed bullish, we don't take buys, right? We don't take buys. But see, Umar, this is your question, FX 101. This is your question, right? So if it breaks the high, so I would have entered some buys over here, right? I would have entered some buys over here. So price went up. So this was what? This was around, not even, yeah, this was not, yeah, this was not even like 6-7 pips, right? So now I would wait. So this area was juicy candle to the left. So now we know bullish momentum is kicking back into the markets. We broke the high, price went up. So now we formed a weak bearish candle. So this is your cue. This is price telling you, you know what? I'm giving you a safe opportunity for you to enter. It's up to you to whether to capitalize on that or not, right? So what happened? It formed a weak bearish candle. So as price comes up and breaks the high over here, your cost of trading, look at the pip sizes, right? 278, 236, around 4-5 pips. 4-5 pips. And what happened? Price went up all the way here. So this was around what? Around 6-7 pips. And then if you put the stops at break even, you can have secured majority of the positions here. This candle came down but didn't hit your break even, and this candle went all the way back up. So these are like, you know, these are cues and clues that price gives you to take a safe trade with managed risk. When you manage risk to these trades, also throughout the week, I took trades like this, just like this, except for gold buy stops. I took trades like this on GJ. GJ has been trending this way. Whenever it's bearish, we wait for a bullish candle to form, just like this, just like this, bullish, weak bullish, and break the high, and we look for clean candle to the left. So this was a clean candle all the way to the left. We took some entries and that was it. And whenever price is bullish, right? Whenever you see bullish structure come into the market, so you can enter at this point or at this point and take the trade all the way up over here. So now let's talk about risk on and risk off, right? Risk on and risk off. So like I said, right, just over here, where was that? I closed that trade on $1 one lot. I closed it on, it was GPGPY sells, GPGPY sells was here, GPGPY sells, yeah, right over here. So as price, so see, I open a 5 lot, right? So as price was coming back to my entry, risk off. You take one lot off, and then as price is coming down, you can add more positions, right? So right over here. So let's remove all this. So visual representation is very important. So let's remove this. Let's remove this. Let's remove this as well. So let's see, right? So visual representation once again. And so price was breaking down here. Price was heading all the way back down, right? So it was coming back up here. So risk off. I took my risk off here. So risk off, but I didn't add further risk back on. So I added more risk, right? I wanted to capitalize more on this trade, but this trade resulted in a minor loss. So if I were to add more risk, I could have taken sells over here and taken the trade more down. But what I mean by risk on, risk off is that once price comes here, you take risk off. Take risk off, take a percentage of risk off over here, close trades and 50%, 50% at entry or 50% at a minor loss. And then as price is going down, like as you see, you go to the 5 minutes, right? Let's put this up. Let's put this up. Short position here. So if you want to add risk on, right, you go to the 5 minute. Let's go to the 5 minute. 5 minute, right? Let's go 5 minutes. Where's the 5 minute? So let's look at the 5 minute, right? So this was the 5 minute. So on the 5 minute, it looks like this. It looks like this, right? So this candle came all the way down. So this is where I took my risk off. And now this candle broke the low over here. So when this 5 minute candle breaks the low, you can add your risk that you took off over here. So control it all the time. You don't have to get confused. Control it all the time. Keep it at a dollar value. Let's say you have a 10 cent lot open. Your risk is like $6. Keep it at, so now you took off, let's say like 10 cent, right? 10 cent, and your stop loss is right over here. So 10 cent lot. Let's take a 10 cent lot. Stop loss is $8, $8.80 cents, right? So now when price is coming back to you, closed it in a minor loss of like, let's say 0.60 cents, not even $1, 0.60 cents. So now you have a position running, right? You have, let's say from 0.10, you have closed 0.02, right? 0.02. Now you have 0.08 running, 0.08 running. So as it breaks the low, you can add that 0.02 which you closed here all the way back here. So now you are adding more risk, adding same risk by controlling the risk factor. You're controlling the risk factor, and price heads all the way down, and like price comes down here. So now you made a profit. So whatever risk you took off here, you added more risk, and you got that trade. Same thing. So that doesn't mean you have to always add the risk back on. You have to monitor your trades. This is during a high volume time. 5:45 my time. I've told you this all the time. 5:45 Colombo time, you get a lot of volume. So you get a lot of volume at that time. So this was exactly for the time, 5:30. 5:30. So 5:30 to 5:45, you can expect some volume, and this broke all the way down. Let's go to the 5:45 volume. Yeah, look at this volume kicked in, and this entire move was around 10-15 pips, 10 pips. So this 5-minute candle was 10 pips. So that was great. So when volume kicks in, always make sure you can leverage, use proper leverage, and use proper risk management to take entries. So yep, so this is what I want to discuss, right? Next week also, I would say that these opportunities will come. So when this opportunity comes, you have to monitor them on the 15-minute, on the 30-minute, and depending on the session time, right? If like let's go to the Asian session. So I've seen this on the Asian session as well, but Asian session takes around, let's go to the Asian, yeah, look at this, right? So let's look at this, right? Let's look at this. Let's look at this. This is on GPGPY. So how is this camera? Yeah. So look at this, right? This is on the 5-minute. Yeah. So let's go to 15-minute. 15 minutes better. 15 minutes is a better confirmation. So let's go to Asian session. So let's look at Asian session. This is Asian session. No. Asian session on GBP. Let's go back further down. So this was a range, right? So I want to show you an example during a range. So yeah. This was a range. This was a range. Yeah. Okay. So let's go here. Yeah. So this was during 3 a.m. So almost market, the New York closed and Asian Tokyo, everything opens at this point. So let's say this, right? So now you see that price came up, closed below this. This was a support, closed below support, and see how this, right? See how this price came all the way back up. It looked like it was going back up, right? Closed below. So if you had taken this buy, right? So you get 3 pips here. This takes 15 minutes, and then this takes around another 15 minutes, 30 minutes. In 30 minutes, you can get your 10 pips. So, but this move in the Asian session doesn't happen all the time. No way. Just look at this. So this was taken at 12:45 London. So it depends, like all these moves which I've caught, this was around what, 6 pips, right? All these kind of strategical moves which I've caught were in New York. New York and New York SE Open, NYSE Open were close to that. But apart from that, these things don't work out during Asian. Asian is pretty slow. Volume is very slow. So it doesn't. See, look at this. This was on the 13th of November. Same thing. This was still on 5:30, right? Yeah, perfect. So what did I tell you? 5:30 to 5:45, you get volume. So you hunt for trades during that time. And this reflected this area here. This mirrored this entire candle right here. And then we have this candle mirroring this entire thing. See that? So this, once we broke the low, let's say we took a trade right over here. If we had taken a trade right over here, short positions, right? Short position on 13th of November. This was last week. Perfect. Same this thing. We had some traffic here, but that's okay. Why? Because volume came down, and then this was around 4-5 pips stops, and all the way down 17 pips. So this trade. So this you take, this is a new 15-minute, right? So this 15-minute would have done its thing here. And then this trade took, I think, 7 minutes. Yeah, if I can remember this properly, this trade took 7 minutes. 7 minutes to get like 10 pips right over here. Yeah. So think about this, right? If you're trading Asian, you'll have to stay awake for like, stay awake or stay on the charts for like 2 hours. 2 hours for this move to happen. And obviously there'll be some erratic moves, and like things go south, and like like you have to manage risk. Spread is pretty high during Asian. This is perfect. Like During New York, you get a move down like this. Spread is normal, volume is high. You can get your 10 pips on college day. It's simple as that. So this week we went through weekly sessions, and this week not many trades were taken. Right, many trades weren't taken because yeah, Wednesday was a no trading day for me, and Tuesday was full of range. Tuesday we took two losses, and then finally we took a buy. I mean, sorry. Finally, we took a sell during New York Exchange Open on GBJPY, and then we had gold buys for core retail sales. See, these are on back of my head. Like, I don't have to look at my terminal because all these things I write it down. I write down what happened for the day. So when you write down certain people, when you write things down, you understand it. It goes to the back of your head. At the time you're writing it down, you won't recall it. Like, you will think, oh, you know what, I'm wasting time. I'm wasting time writing this down. But actually, see, right now when I'm trying to recall it, I can remember it. I can remember the exact days that these things happen. I can remember what happened on Tuesday. I can remember what happened on Monday. Or I can remember what happened on Thursday. So yeah, so gotta write it down, gotta manage risk. End of the day, risk is everything. Because people might give you, like, let's say you earned your money, $10,000, and you put it in your trading account, and then you are responsible for your account. End of the day, right? End of the day, you are responsible for your account. You lose 5,000, 50% of it. That's you. That's on you. You can't blame anybody else. You can't be frustrated on anybody else. That's on you. So at this point, you have to manage your risk in everything in life. It applies to everything in life, right? Same when you're driving a car, do not go too fast, slow down during zebra crossings, pedestrian crossings. So just like that, we know when to accelerate and know when to slow down. Simple as that. And today we also went through some possible entries over here. So these are my favorite entries. All these entries, any day, I would take this trade any day. I would take this trade any day. Price came up. So GJ has two things. One, so let me tell you, last one, right? Last thing for today. GJ has two things, right? This is for a bullish trend. This is for a bullish move. This is for a bearish move. And then there is one more thing that GJ loves to do. GJ loves to do this. So let me go back all the way, right? Yeah. So let's go here. Let's look at 30-minute. So if I were to buy off a support, right? Let's look at this. Right? So let's remove all these triangles, right? So now let's draw this. This is the 16th of November once again. Yeah, 16th of November. This is during Asian. Okay, fine, no problem. That's okay. So now we see this area, right? So now just imagine this during New York, okay? This is taken during, let's say this is during New York, and now we see that this area, right? We come all the way here. Yeah, this hasn't happened yet, no, so let's place it here. This is the new thing. So now this area is right over here. So when you extend this to the left, you'll see further confirmation. So all the way here. So now you see this area was a resistance. This area was a support, came down. This area broke through this. This area formed above this, but broke below, right? Same trade, look at the same trade. Perfect, 30 November came down. So same trade, this is one trade. DJ gives clues, right? So you know what, Resh, I'm gonna go down, I'm gonna break down. So I'm just gonna give you a clue. I'm giving you a weak bullish 30-minute candle. And once it breaks, and we have to say bye-bye, and DJ goes. So, but we look down here, right? This was support. So this was during 4 a.m. So let's just imagine. So if I were to take a trade here, I wouldn't be taking a trade right over here. Why? I would be, now there's some resistance here as well, right? Resistance here. So if I were to look at the resistance, so from here, the resistance is around 7 pips, right? So 7 pips, and then I see, wow, look at this beautiful candle to the left. So either what I would do is I would wait for this candle to do its thing here, come up and break the high over here. So as soon as it breaks the high, right, I can take a long position. These are taking trades off support. You wait for a nice 30-minute to form. Like, look at this. This candle was awesome. Not like this. This candle was super weak. just because it was weak, like I just because it's a 30-minute, I wouldn't be taking a buy. This candle didn't even break the high, so no two confirmations. You look for two confirmations. One is a nice, beautiful body over here. One is like this candle breaking the high. Didn't happen, so no trade. So you see this beautiful candle over here, and now you know what? Oh wow, like this candle is awesome. This candle is awesome. Broke the high. So this stop loss would be around 18 pips, but you can manage it on the 15-minute. So let's go to the 15-minute as it broke the high. So where is that? Where is that? Where is that? Yeah. So this was taken right over here, right at this point, right at this point. So you took this trade here, right? You took this trade here, right at the breaks. You waited for 2 15-minute. So 2 15-minute candles mean 2 30-minute candles, right? 1 30-minute candle. So now you have taken a trade here. What you can do is you can bring your stops all the way here, somewhere to the middle, because you're respecting the 30-minute plus you're respecting the 15-minute. So now you're anticipating this. You know, look, once again, this is during New York. Just imagine this is during New York. Okay, so now you're anticipating this price to break up. So as soon as it comes over here, now this is a major support, major resistance, and this is a major resistance all the way here. So now you know that looking at the 30-minute, there is clean candles, clean candles. Look at this, beautiful, clean candles to the left. No disruptions. Only here we had some tension, but this 1 2 3 same candles. So now you know price is breaking up, right? Breaking up. So as soon as it's breaking up over here, you can take profits, some majority of the positions here, and you can bring your stops further here, down below this, right? Now this is called the breakout candle. So breakout candle, why? Because all its brothers and sisters tried to escape this area over here, but couldn't. They were caught by the cops, and they were like, you know what, you are sent back home, go back home. These guys somehow managed to escape, and now the getaway car is right over here. They got in, and now they're running. And this is the destination. Is exactly the destination. Why? Because you see that some rejections over here. When you extend this to the left, you draw this all the way from here to here, and you see that this area was a rejection point. So if I were to place it right over here, look at that, to the T, always, already here. So now you know that price came up, respected this, went all the way back up, and so if I was a betting man, I would have taken this trade as the high was broken. So why? Because two things. One is a 30-minute candle high was formed, a 30-minute candle, proper 30-minute candle. This is called a proper 30-minute candle. This was formed, and then this candle broke the high and all the way back up. So this is perfect. This was amazing. So taking a trade off a support, you don't just take it just because one candle formed. You take it when there is a nice 30-minute candle and then it breaks the high. Simple as that. And same thing over here. Now we see this one, like this guy is coming during this was during London, came all the way back here. Now this was a resistance, right? So now let's go back, right? Now let's go back and let's put our white line here. This is the final entry. So these are the entries I look for, right? Let's put this line, and we see that, you know what, there was some kind of a support here. Price came down. Let's go back further. Let's see if this has been respected. Yeah, so it's almost here, came down. So let's place this right over here. So yeah, this is respected. So let's go back to this again, and let's see what we can do here. So this candle, right? So now this candle broke up. This candle broke up all the way. Here, right? So this was a clean area. So now we had further clean areas, one stop here, and then we had this area here, right? So now this formed like this. Okay, this formed like this. This was a resistance forming. So now, right now you don't see this candle. Now just imagine you haven't seen this candle. Okay, you haven't seen this. So now when you came during London, you saw prices going up. So no FOMO, right? You know, if you take a buy over here, your stops are going to be like 30 pips. So no FOMO, no fear of missing out. So you wait till price gives you a clue. This was the clue. Formed a weak 30-minute bearish candle. So now you know, okay, now you know if this candle high breaks, right? If this candle high breaks, we are going up. So once it breaks, Your stops can be minimalized. 13 pips instead of 30 pips, 13 pips. So now that's a good deal. That's a good deal, right? So now you look left and you see, okay, you know what, we might come up over here. So now from the point of entry from all the way here, this area is around all the way here, 10 pips. So you have 10 pips, but you know there's further range all the way back up here. So 30 pips, so 30 pips all the way here, and yeah, so got 30 pips. So always look for these kind of entries, during high volume times. High volume times are London and New York. London and New York and all the way here. So look at this. Perfect. This was taken off support. And yeah, so today we went through our weekly live recap. Plus we learned how to take how to trade the trend, and how to take entries, reducing stop loss. Over here, you're like a buyer, you're bargaining, you're in this market, you're bargaining for the best price. That is what you are. You're a merchant bargaining for the best price. You want the best price. You want to supply for the best price available to your customers. So your customer is you, the merchant is you, end of the day. So you are supplying to yourself. So you have to decide what price you are supplying and what's your maximum risk. And yeah, so these are the trades I look for. So that's about it for today. Tomorrow I will send you guys the Asian analysis, and next week. So let's go to Forex Factory, and let's see if there were any news. Oh, Georgia confirms results and later setback for Trump to bid. Okay, President. Another blow on Friday after he had lost Georgia. Okay, so maybe this might have some kind of effect. So let's go to calendar. Now let's see. This week was this next week, right? So November 21st. So this no, let's go to Monday. So we have on Monday we have some euro news. So this might move London a lot. A lot, and then we have GBP 3 p.m. and then we have this area over here, monetary report. So yellow folder news. Tuesday we have nothing much. Then we have Wednesday. We have looking at Wednesday. We have lots of USD news coming in. There are lots of USD, but yellow folder, but a lot of news. So unemployment claims for USD. And then Thursday, bank holiday on Thursday. So going to be pretty slow, but yeah, we have a smooth sailing week ahead. And let's see how this week goes, next week goes. So once again, motivate yourself. Look at this. Every trade was taken live, right? Literally every trade was taken live. One trade like on right over here. Where is that? Oh, I've taken that away. Okay, that's fine. Yeah, right over here. So this trade, only this trade was taken. Where is that? Okay. Yeah, so only this trade, I would say this trade was taken off the live streams. This trade was taken off $243, and then this, because all these were cues given before the stream ended. I told you guys consumer retail sales are coming up, so gold is going to go bullish. So you gotta take that risk, right? You gotta take that risk. You gotta take that controlled risk. And if price doesn't go your way, you know what, you took it. End of the day, you took it. So yep. So we made all these trades. We made $1,295. I made $1,295. So that's it for today. And hope you guys got the idea of all the trades taken. And this session is recorded. So let's see who attended today. Yeah, JJ, Jonas, FX101, Daniel. Okay, so everyone who attended today, this guy's recorded, and I would post this recording on Slack group. So have a look, and let's have a good weekend. Relax, reflect on your trades taken, reflect on yourself, reflect on your habits, reflect on your behavior, and see how we can tackle next week. So let's see what next week brings us, and hope you guys have a wonderful Saturday and enjoy your Sundays as well. So have a good weekend. Take care. Oh, before that, any questions? If you have any questions, feel free to ask. Before I go, if you have any questions, feel free to ask. I'll be here for another 2 minutes. So if you have any questions, feel free to ask, and you are free to go. You are free to go. Have a good day.